Welcome to Trends with Benefits, an award-winning podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, work, and life. Here's your host, Ed Lopez.
All right, Matt Bartlett, welcome to Trends with Benefits, the Quickie edition.
Thank you, Ed. I'm honored.
Awesome. It's great to have you on. We're going to be talking to you about some cool trends in the digital asset space, specifically NFTs, tokenization, some things that are happening there. You're CEO of SegMint.io. And for people listening, that's SEGMINT. And we'll talk a little bit about what all that means and what SegMint is. But, I find it interesting just knowing you for years now at Van Eck and your career progression there and your move to SegMint has really had that up. I find that progression to be very cool because you've gotten into a really interesting area that I think is really kind of setting the stage for the future of the way I think society may operate. And I'm sure we'll get into all of that as well. Perhaps I can start with some of the basics. I set up this part of the discussion, or our discussion, as being about NFTs and tokenization. And for those that aren't really following it too closely, which I know these days it's really hard to do with some of the crypto ETPs out there, NFTs were a big thing in 21 and 22. Kind of seem to have died off from the headlines. Can you kind of recap kind of what happened there? Is there still, it seemed like it got really heady and people were really excited about it, and then it's just kind of died down. But I think there's still some things that are really happening there kind of longer term.
Yeah, fair enough. Well, in terms of like a brief history, actually, if you go back to 2017, that was when we actually had the original mint of CryptoPunks, which they weren't really the first NFT, but they're quite popular. And coming out of the crypto winter that sort of started in 18 all the way to 2021, that's really when things began to take off. And you may also remember, and of course they're still popular, but Bored Apes or Bored Ape Yacht Club, they were very notable for being valuable assets. But we kept having this run up until early 2022. And that's when we ran into the next crypto winter, right? And that was a tough bear market. That was our last bear market. Lots of sell-offs during that time. We actually had a marketplace called Blur come out, which supported professional traders, but in an attempt to sort of farm airdrops and rewards, it was sort of a race to the bottom as collectors were looking to essentially undercut each other on their floor prices just to get out whatever last remaining liquidity was there. So at this point, I would say there were a lot of people who thought maybe NFTs were dead. And I mean, I have some friends that were almost talking trash to me at that point, right? And I had to try to make a case. But if you fast forward to today, we've had a lot of good momentum, I'd say, over the last 6 months. In fact, CryptoPunks, I think there were 2 or 3 of them that sold for over $15 million recently. And if just as a reminder, that was a free mint back in the day. So the market is sort of shaping up differently. We do have Solana NFTs that have done well, and that I think is mostly tied to the token increasing. Bitcoin ordinals are booming, I'd say, and ordinals are sort of like NFTs on the Bitcoin blockchain. And then I think maybe a real differentiator is that there's more or greater interest in NFTs that have some sort of tie to real world assets or RWA. So those that have like an intrinsic value that I would say has mostly been absent from a lot of collections previously. So it'll be very interesting to see where things head.
Yeah. So is it fair to kind of look back at history as NFTs were kind of used more for kind of collectibles and things of that sort? Now you're seeing more opportunities for real utility in terms of the technologies?
Yeah, I mean, for sure. And if you think about a CryptoPunk, it's the reason why there is value there. It is one of those original collectibles. But again, since that time, thousands of NFT projects have popped up. And I would say that art has sort of become overly saturated. And so now people are like, all right, well, what's the real utility? What's the intrinsic value behind it? And I think we're starting to see people focus on that more, although there are still very good artists out there. Jack Butcher is one, Snowfro, and other popular names where their work still commands high dollar. But for those that are just getting started, it's tough to sort of make a name for yourself just on pure art alone.
To what do you attribute some of the latest work going on in the space? Is it new technologies? Is it, I don't know, I'm kind of talking out of my rear here, but like, better protocols, whatever. Has there been some evolution in the NFT space now that makes the potential of the NFTs that everyone talked about even more feasible?
Yeah. I mean, NFT, the technology hasn't changed so much. There are, of course, different token standards that come out and make certain things possible. But again, I would go back to really like, what is that intrinsic value? What's the utility? There's better uses of the technology. Like we've talked for a long time about how NFTs could disrupt, let's say, Ticketmaster or something, right? But now you're starting to actually get some projects that might have a chance at disrupting that business model. So I'd also argue that if you think about the end of the last bull market, a lot of these projects found themselves really running out of runway of capital. And so they had great intentions or they had really talented people, but they just ran out of money. And so they kind of stopped dead in their tracks on progress there.
So was the crypto winter actually kind of good for that space then to re-energize it?
It was tough. I mean, just as an example, and we were building SegMint. We started testing SegMint contracts out in, I want to say, the fourth quarter of 22. It was really tough to build during that bear market because it's just, there's no momentum. People are disenchanted. And in fact, if you were new to NFTs at that time and you had participated in the bull run a little bit, once the market got hit pretty hard, you almost stop looking at it. You don't want to be reminded of your losses now. And so people just kind of look away. So it was just tough to keep your head down. But I do think there were a lot of great projects that came out from that bear market, including ours, but people that just kept their head down and kept building. And I think since October, you've seen a lot more projects come out who were well-funded. They got enough runway. And now we're starting to hear more about them.
All right. So tell me a little bit about SegMint.io, how it got started and kind of what the mission is.
Yeah. So it's a digital asset management platform. And it really started around the creation of this novel method for fractionalization that solves for what I felt was like existing problems that sort of plagued all the other platforms. And so we have this concept called the lock and key model that has a great deal of potential for enabling collectors and investors to be able to share ownership and utility of their assets, but in more of like a self-custody way. And then we've added features such as you can create your own multi-sig wallet tool to protect your assets. You can create your NFT collection. So we have a really nice minting feature. So it offers a lot. The core is around this lock and key model, though.
Now, maybe I want to ask you about the lock and key model a little bit more, how that works. And maybe this question is related a little bit, but differentiate that from my basic understanding of an NFT. I thought like with an NFT, you essentially tokenized something where you could program it to do certain things. And you're saying you can do that too with SegMint.io.
Well, at SegMint, like if you were an artist or a creator and you wanted to create your own collection of art NFTs, you could do that. If you had a high-end piece of art and you wanted to fractionalize it, you could do that. And so those are some of the services we offer. But I guess the way to explain the lock and key model is more like you have a Web3 wallet, and this wallet owns a CryptoPunk. You could then head to SegMint. You can create a digital vault for that asset. And that asset is owned by your Web3 address. And so that's sort of like the self-custody part. But we've also integrated something called delegate.xyz that allows you to delegate back any of the token-gated benefits that you would normally receive back to your wallet or someone else. So, if that NFT was like a membership NFT, so you can go to parties, you would still be able to do that. Or if it's a Web3 game, you could still play the game. And so think of delegate as like a power of attorney light for your asset. And then once you've locked the CryptoPunk, let's say in this example, in the vault, you could then create any number up to 100 SegMint keys. And the keys, if we're being technical, they're ERC 1155 tokens. But all you really need to know is that they're just fungible clones of whatever you've locked in the vault. So if it was a punk and you made 10 keys, it's 10 sort of punk derivatives. But they're called keys because you need to own them all if you want to unlock the asset and take sort of that transferable ownership. So it's very different from what other fractionalization platforms do. And it offers sort of like a new way to share ownership and access. And so, the most common question I get is like, well, why would I buy a key if let's say in this case, Ed has the asset locked in his wallet? Well, again, with any fractionalization platform, you get the low cost entry point, but now you get the visual of the asset. So you can sort of like flex and brag to your friends that I own a piece of this asset. And it gives you the opportunity to request those delegated benefits as like a consumptive utility. So we view it as like a win-win for everyone involved. And if you live outside the US, you can actually trade the keys on the SegMint trading platform, and all of the other features can be accessed by US users.
When you create something on SegMint, it sounded like you could create certain rights that are given to those keys. Is that right? You can program certain attributes?
So we've integrated Intangible.io, and this was a company founded by Amy Lee McDonald. She's a former patent attorney, and now she runs this company. And it allows creators, so this is mainly for the minting tool. So if you mint an NFT collection, you could actually stamp within the metadata, sort of like the data that just describes the token, what the terms of use are. And so that's something that's really been missing for a long time. Like, you don't know if you buy something, what can I really do with this token? Can I print it on a t-shirt and sell it? Can I put it in a token frame like I have behind me and just enjoy it for my personal viewing at home? So this integration allows users and creators to sort of like just define what those terms are, and then it sort of keeps it clear for future users and buyers.
Yeah, like, so let's say for like art, for instance, or an image of some sort, could an advertiser buy a key and have some basic rights of using the image for a period of time or something?
Yeah, so I mean, when it comes to the keys, I'd argue that you really just get to enjoy the visual unless the terms say differently, and the terms sort of that tie back to the original asset, because you are creating a derivative. But again, most of these NFT projects, in most cases, you own the IP. You can kind of do what you want with it, right? And a good example is you've seen Yuga Labs make it to where people have sold wine and liquor, or they've had there's a law firm that uses the Bored Ape on their billboard, and so they're using it as part of their brand, and you're free to do that depending on the project.
What do you envision for the future of what maybe perhaps expanding the model, the lock and key to other types of assets? What do you see coming?
Look, I think in particular, tokenized real estate represents a really solid opportunity. I think it will take us a while to get there, just due to sort of, making sure that we're doing it in a regulatory compliant way. But, there are projects, and we're not affiliated with them, but like Fabrica.land and Roofstock on Chain, they're tokenizing real estate, and they use trust or LLCs to sort of make it so that the owner of the token is the owner of the real estate. And this works legally depending on where they're doing it. So if regulations ever allowed, you could theoretically lock the NFT within the vault and share keys tied to ownership of that asset. But even better, and I think something that is not really tied to SegMint, but something that we'll see real soon, is being able to get like a collateralized loan on your NFT that represents the real estate. And so there are projects like NFTFi, Arcade, KettleFi, where you can get a loan with decent terms in a matter of seconds, compared to like what you and I go through in the US to get a HELOC or a refi, tons of paperwork, getting the lender everything short of blood type just to get the cash. And I think we're going to see this actually take place in the next few years from what I'm seeing in the meetings I'm having.
Yeah. Real estate's a really interesting case. I've always thought that could use some disruption, if you will. There's so many frictions there, right? Whether it's commissions or a bunch of different people you got to pay and different things you got to do. Outside of real estate, what use cases excite you the most?
So I consider myself a crypto native. I'm really eager to bring these RWA-backed tokens to SegMint, and I view this as a priority to make sure that we have very unique offerings on the platform. So we're partnering with projects like Watches.io, a few wine companies. There's one in particular that I find fascinating. It's called Metacask. I think they're actually rebranding to Proofworks. They tokenize entire casks of high-end spirits. So think like 20-year Macallan Scotch. And there's really different price points here. Like, you can get a cask for 15 grand all the way up to 1.5 million. And it works out nicely to have keys made because, there's sort of a finite amount of bottles you can get out of a cask. So if we worked with them, key holders who held the keys past sort of the bottling date, they might be eligible for like 2+ bottles of whatever the spirit is. And that would be a really interesting way to sort of fuel speculation around trading the collectible, but maybe you end up with with a really rare bottle of something that you're a big fan of and you can enjoy at home at some point, So those are really exciting for us.
That's interesting. How would that work? So if I had a key for this cask or whatever, do I turn it into somebody and they send me those bottles, or does that whole set of keys have to be repurchased or reacquired and then everybody gets their bottle?
Yeah, great question. So it's a little more straightforward with, let's say, watches.io, where a $100,000 Rolex backed NFT comes to SegMint and the user creates 10 keys, and now those keys sell for, let's say, $10K a piece. Ed Lopez comes along, buys up the collection, he unlocks the vault, and he takes ownership of that NFT. Well, now Ed can go directly to watches and redeem it for that physical watch. The trouble or sort of complexity with wine and these spirits and casks is that eventually it'll turn to vinegar, so you do have to bottle it. So it's not as cut and dry there, but it's a really interesting use case that we're going to work with these companies on, so that, and I'm speculating as of right now, how I envision it working would be, there would be a white paper that would explain sort of what you're buying with the keys and maybe what that date is, that is sort of the bottling date. And past that bottling date, we could freeze the keys, and then we could work out a way for you to redeem based on like your wallet address. So we could see that you own that key based on your wallet address, and maybe Proofworks can honor the bottle redemption, right? So that's one way to think about it. But I don't think that that's like the most efficient way to do it. We're still kind of working through, and I think we probably have some time to think that through, but we'll see.
Do you see finding interest from advisors, or maybe it's just individual investors, but do you see applicability for advisors working with clients that may have certain types of real world assets and trying to figure out how to monetize that?
It's really challenging, I think. And you know this, right? We have different distribution channels here at Van Eck, and all the way from, institutional family office all the way down to RIA, FA. I'd say some channels are farther along than others. I mean, the listeners here might expect family office to be farther along. That's kind of my impression too. RIAs are also getting it. I think it's challenging, depending on which broker dealer you work for. In some cases, you can't even sell a Bitcoin related ETF just yet, so the firms are a little bit more cautious. And because of that, there's a little bit of work to do on the education side with some of these groups. So yeah, I'd say in general, the typical RIA is probably not going to come to SegMint and scoop up some wine NFTs for their clients. That's why I really focus on the crypto natives, because in some cases they have very high concentration risk. Maybe they're Bitcoin maxis or ETH maxis, or maybe they hold a lot of illiquid JPEGs, and it just either goes up or down in one way. Maybe by adding something like an investment grade wine or a luxury watch, maybe they get some sort of correlation benefit to their portfolio that might be in line with what you would get from high value art or even like private equity. I don't know. That might be a reach, but that's what's fun about what we're doing. We're going to see, it's a very new use case. We're going to see what the response is and how people use them and think about them.
That's awesome. What's the best way for people to learn more and find out more about what you're doing?
Yep. Well, I mean, for one, I do write a weekly Substack at blubbernotes.com. It's like an NFT newsletter. It's educational. I share my favorite projects. I'll give occasional updates on SegMint. Do go to segment.io, sign up. We're actually in the process of deploying to Polygon. We have a free NFT claim for those that are willing to complete the KYC. We've actually paused that claim just until probably the second week of April, but go ahead and do that when you're able and sort of join the fun. Otherwise, follow me at Matt Bartlett VE on X.
That's awesome. Thank you, Matt. Thanks for your time, and thank you for listening to this quickie episode of Trends with Benefits.